Okay, this particular one, of course, we know the flow is down right now. We're in downtrend, and even if this move is too impulsive, and hard to retrace, of course, this level of retracement is not enough. We expect it to come a bit down, even if it has to retrace for more upside. It has to come a little bit down. So based on that, whether retracement or reversal or continuation, it has to still come down. And then when we look at it on the 1 hour time frame, of course, this move here is a big volume move, transitional candle. Okay, so based on that, I expect that if I take a few of this move, all right here, I should come over here for any continuation move to the downside. And again, this is our big supply level, it's our big supply zone. But early in the morning, market was right here. I think you are following, so I'm doing it. This is how I saw it. When this move came and this retracement was coming, I knew there was need to fill this imbalance right here. I had to fill it before any move to the downside. So I came to 15 minutes and I got in at this demand zone right here. Boom. I placed a limit order. That is the downside of a limit order, guys. Limit order right here, stop loss very tight, just above the demand level, and TP right here at my supply zone. All right, this is supposed to be 1 to 8 risk to reward guy. All rules were followed, but one rule was ignored and I got punished. And what's the rule that was ignored? I entered right at London session. I think Frankfurt open, other European countries open an hour after London, right? Mark, is that correct?
Yes, except Frankfurt. Frankfurt opens 1 hour before.
Oh, so my entry was right at Frankfurt. Okay, and of course, you know, volume then could be deceiving, could be deceptive, right? And I enter at Frankfurt, and what happened? I was taken out at the start of London, right here. I was rigged out of the market. I ought to have waited for London that had bigger volume to come before I get in, but I did not. So as soon as I was taken out, the market moved to the upside, hitting my TP for 1 to 8 risk to reward. Yeah, so that's what a lack of little patience can do at times. All analysis had been done, you know, and they were all correct. And you can see the imbalance filled. Okay, market right at supply level. Any confirmation at this zone now is going to be a big move to the downside. We're just waiting for confirmation. Okay, waiting for confirmation. What kind of confirmation are we waiting for? Well, let's check. Of course, you can see clearly that this market is broken to the downside. The structure is broken. And if the structure is broken, we want to check if you really have some imbalances. And you can see it here, you have imbalance right here. Then you want to check your supply zone. Okay, you want to check your supply zone. You can see right here, the market was slow before it made a big push to the downside. That is right your supply zone. Right there is your supply zone, guys. Supply zones. Can you see that market tap into this supply zone and move down? Straight, this is supposed to be our entry if we had set a limit order, 1.10446 or 45. That was supposed to be our entry. Can you see? At every supply zone, guys, or demand zone, if we spot it well, the market will reverse from there. So this trade right now, though with this one, it will be a bigger risk, but stop loss has to be right above here and then TP down. Okay, when market is retracing, its sole objective is to fill imbalance. Okay, any imbalance from the imports, it has to fill it. And then when market tap supply zone or demand zone, its main objective is to take up liquidity on its way. Where are the liquidity on its way, guys? See them here. This market is coming to break this level, okay, and possibly fill any imbalances along its way. Where are the imbalances? Look at them here. Look at one here. Okay, so possibly in the near future, this market will gravitate towards this level. Okay, come this level. Okay, so if we have picked our entry right from supply zone, this level, this trade, the stop loss will have been here. This trade will be like 1 to 14 or so, no, 1 to 12 or 1 to 13 risk to reward. So if you can reduce your lot size, you can get in for a sell, provided you can put your stop loss right above here around 1.1088 or so. If you can put your stop loss there, I don't expect the market to break that level. So I expect this to begin a move to the downside. All right. Same thing you see here on the GJ. Okay. You know, some of my students will understand this pattern. When you have a consolidation and a break to the upside for a downtrend market, what it's doing is to take liquidity, and what confirm that this break to the upside is taking liquidity is immediate flush to the downside. Okay, so when it flushes to the downside, all right, corrective structure filling the imbalances and, you know, coming to supply zone is a sell market to the downside. Okay, the same thing you see here, guys. It's as simple as that. Consolidation right here, the market broke to the upside and immediately flashed down. This is a textbook, you know, pattern. This is a textbook pattern. What is the objective of breaking to the upside, guys? Filling all the imbalances here and take liquidity, okay, from here. And what confirmed that market has grabbed enough volume from here, the speed with which it went there and the speed with which it left that spot. Can you see? Left that spot and do what? And break market structure. Okay, soon as market structure is broken, guys, you need to do something. You need to take this fib. All right, anything below 50, do not sell. You have to wait for any supply level that is above 50% retracement. Look at my supply level here. I told you, you see small candles before the big move. Okay, and then just below those small candles, you are going to spot some imbalances. All right, see this? After that, guys, what do you see? A big fall to the downside. Right here, guys, is your supply zone. So if all others GBPPS have confirmed, GBP USD has not confirmed. Okay, because it's yet to complete filling the imbalances, guys. It has not completed this. Okay, we see expect it to push a little to the upside. Okay, a little to the upside, exactly at this level. You see a confirmation there, guys. You can sell to the downside. I told you the objective of coming to tap entry here is to fill the imbalances right here, guys. All these imbalances, okay? Can you see break to the upside, break market structure? Okay, come back, filling those imbalances, and then make a move to the downside. Okay, it will take the low and begin to fill any other fine areas like here, all this area to fill it, you know, possibly this low can take it, this low it can take it on its way to the downside. But for now, we just have to be interested in our entry and how, but this level, at this level, is not good to enter. Okay, it's not really good to enter because we see have some zone here that are not tapped yet. So though it can flush at the current level because most of the GBPPS are getting ready now, but I'm not comfortable selling this. But you can see a lot of rejection right here. That shows that it may just be ready at this level. But I will have been happier to take it if it had come to tap this level. Okay, and if what is developing here is happening right here, that would be the best trade to take to the downside. That is GBP USD, guys. This was a very good trade we called yesterday for about 130 pips or so. Okay, about 130 pips. I'll tell you the thought process behind that trade. Okay, it was massive, about 1 to 10 is to reward. Okay, the same thing I told you on GJ right now is the same thing that is happening right here. You see, it's a typical structure. See, this corrective structure based on ELLIOTT wave theory. Okay, so if you have this consolidation here and you have a break to the upside and have a massive flush down that break market structure, what does it tell you? It tells you that you have to first of all find out if this break to the downside leaves some kind of imbalances. Yes, it does. Where is it? Look at it here, guys. Look at this candle, big one. Okay, that's an imbalance candle. So anytime such happen, the market has to come back to come and fill it. Okay, and then you need to identify supply zone. Okay, this supply zone right here is our supply zone. Can you see it? We have to wait. Can you see? Market came back. We had that patient to wait. Market came back right in our supply zone. Look at it, guys. Tap it. Okay, and make a push without waiting. No drawdown. Just tap it, bam, and make a move to the downside. Okay, and in making a move to the downside, it has already broken structure again. All right, meaning that another move to the downside is expected. So what do we have to do? Repeat the same process. In the course of making a move to the downside, does it leave imbalances behind? Oh yes, look at it. Okay, when it had a minor break of structure here, you have imbalances, and then where is the small candle that produced the big imbalance? That's your supply zone, guys. Look at it here. Boom. Supply zone. Okay, so we waited patiently, guys, until market get to the supply zone. As it tap into this supply zone, I send this markup to you. Sell again. Stop loss, I don't expect it to break this previous level of structure. So this area is okay for stop loss. Let it go down. What is the motive behind making a continuation move, guys? It has to fill any imbalances along its way. That's how market moves, guys. Look at this. Buy here, no sell. This market has to come and fill it. It has to come and fill it for us. That's why my TP is right here. Okay, so that's how we look at it, guys. Euro card. Okay, Euro card is messing up a little, but I'll tell you why I had to make the call for EuroCard. You know, I've been following EuroCard for quite some times now. When EuroCard was right here, I did a YouTube video and made it clear on why I expect it to go to the upside. And can you see? Boom, to the upside. Okay, that upside move is complete. And then what we are looking at now is a scenario where this last push to the upside is retraced to a discounted level for a possible move to the upside. And if that level is broken, then we forget about the upside and then we focus on the downside. The reason why we are still looking forward for more upside is simple. I'll show you something now. I'll show you something now. You see this level, guys? See this market created equal high here and a pool of liquidity at the equal height here, equal high here. And then look at the pattern, guys. When you have a pattern like this, consolidation here that breaks to the downside, it is coming to tap liquidity at demand and what? And make a move to the upside. So this move to the upside is expected to break this level. For this momentum to the downside to make sense, for this grab of liquidity to make sense, this must move to the upside to take this high. That is how market moves, guys. That is how it moves. Because for it to come down, if it has gone up, we'll say, oh, it tapped liquidity as supply to move down. But now it did not break up. It broke to the downside. So what is it doing to the downside? And look at the speed, guys. Look at how it broke to the downside. Very sharp. Okay, this tells us that this consolidation breaks down to the downside. Then it has to come up, either take order from supply and move down, or break supply and move down, either of the two. So, but for now, what we are seeing is that it has not even come. It has not tapped this area. I want it to tap this area. So since it does not tap it, and right here, this market broke this structure very strong on a daily time frame, then it is normal for us to expect a retracement to discount level. Okay, to discount level. Anything below 50 is discounted already for a buy trade. So this level right here will be great to look for entry. All right, so let's go to 4 hours time frame. Okay, 4 hours time frame. So it will really look as if the market has tapped, you know, order at demand and probably is looking to move to the upside. But I'm just a little bit careful, okay, taking this trade at the current level. I'm a bit careful, okay, because it just tapped 50%, guys. I expect it to go a little bit deeper, okay, because you see this corrective structure. See this corrective structure? It looked too sharp. What's going on here? Sorry. Sorry. This, I did not activate this magnet. What's going on here? Why is it messing up? Oh. Okay. I did not activate it. What's going on here? Okay, this one, this level, although it's a clean correction, guys. It's a clean correction, but if you look at, if you take it from this level to this level, this is just a little above 50%, which is not good. As far as I'm concerned, it's not good. Okay, it's not a good one. So if it's not a good one, then what are we supposed to do? We should find a good one. And where will a good one be? We should expect a good one to come a little deeper. Okay, a little deeper for us to expect this upside to happen. All right. So that's how I'm looking at the Euro card. This is a 4 hours time frame. If you look at daily time frame, if in daily time frame, if we are looking for it to make a move to the downside, of course, you see this, it's not so strong. It's not too strong for me. Okay, it's not too strong for me. So I should still take this as correction. And then you see this break of structure right here. This market broke this structure right here. What's going on? This magnet is activated. Does anybody know how to deactivate it? It keeps coming back. See? All right. So, and this level, this zone here, supply zone. Supply zone. Okay. Why is this supply zone? You see break of structure, and you see right here, you see right here, see a lot of imbalances, which is filled already, and then we took in it for a sell. We went in for a sell right here yesterday, my signal channel, but right now we are still there. It's not moving at all. Euro is a bit strong. It's not pushing downward. My device is malfunctioning. Trading view is not doing well right now. What is going on here? What is it? Does anybody know what to do to solve this problem? Oh, what is this? Does anybody know what to do to solve this problem, guys?
Go on the left panel where there's the magnet icon.
Okay.
Over there. Click on it.
Okay, I'm there.
It should be off. It's not highlighted, so it should be okay.
But can you see if I click any of these two, it will activate. Can you see?
Yes. Give me a second. Let me check from my part.
Okay. So right here, we went in for the sell, stop loss right above, and then TP right down to our expected level, guys, to fill all these areas. Want it to come down to fill all this area. Okay, that was what we did for Euro card. Okay, this was a sweet trade too yesterday. It was a sweet one. Euro GBP. Oh God. Euro GBP. Could it be my network? What's going on here? Even I cannot change pair.
Delay them.
Yeah. So Euro GBP, of course, at times I like to trade some of these pair like Euro GBP, AUD NZD, because it gives me idea of what is happening between this Euro GBP gives me idea of what is happening between Euro and GBP, which one is stronger, which one is weaker, and all those things. You know, that's why I trade it. Okay, the same thing is applicable to AUD NZD. But if you look at this pair, if you look at it on a daily time frame, you can see how the pair run off to the upside. See it, the trend continue to the upside, but I believe you can see how it flows down. Okay, this flows down must be retraced before another down will happen. Okay, and based on that understanding, I look at it very clearly on 4 hours time frame. And this is what I look forward to seeing. You see the first impulse, you see the correction, you see another impulse, you see another correction. But this correction is to go to where? That's the question. Where is it supposed to go to? Told you, just look at along this impulse and see if you're able to spot some imbalances. And you can see it here, right here. Okay, if you don't know what imbalance means, it's simple. When the market is making impulsive move and that impulsive move breaks structure, you are going to see some, some inefficiency in the market. When I mean inefficiency, I mean market where the candle wicks are not touching each other. Okay, look at the wicks of this candle. Look at the wicks of this next one. They are not touching. This one and this one, they are not touching. All right, unlike this one, can you see? This is the wicks, this is the wicks. This is the next one. You can see they are touching. There is efficient market here. But here is not efficient at all. Look at the wicks here. Look at another one here. So this middle here is imbalance, which is a big, area or levels where you have excess supply over demand. Okay, and that was why the wicks were not touching, no demand at all. Okay, but when you look at it, just before that imbalance occur, you are going to see a little candle. It could be green candle, a bullish candle, just small, or an indecision candle just before the imbalance. That is your supply zone. Like here, right here is your supply zone. Right here is your supply zone. And what's our expectation? Our expectation is for this market to fill in this imbalance and tap order from this supply zone for a move to the downside. But you must always wait for confirmation when it gets to this level, because you could break it, you could break the supply zone and turn to demand and begin to go. So that's why you must wait for confirmation. Okay, but right here, you see as it's gravitating towards that level, okay, trending towards that level. But at this point in time, it made a big consolidation. And right here, if you go to lower time frame, you see how this market broke this consolidation level to the downside. That gives us the idea that liquidity has been tapped. Look at it here, equal low here. Can you see? After this equal low, what happened? Market broke down to the downside and immediately ran to the upside. What is it doing? In the downside, it's taking order. From where? From the demand zone. Where's the demand zone, guys? Look at it here, right here. Boom. It took it and it ran off to the upside. This I caught this yesterday. Very easy trade at this level. Very easy trade. Straight on. Less than 3 hours. Less than 3 hours, the TP hit. Okay. Because I anticipated that there may not be enough volume that will have taken this market straight to this level that yesterday. So that was why I took my, my TP just when this, liquidity is taken. Can you see a good example of trend line liquidity? So what we do is that at the end, at the beginning of the trend right here, if you project it to the right, it should hit the level of the TP. Boom. Can you see? Can you see? So all the people that sold, that put their stop loss just above here, we have tapped them out. They were selling from here, putting their stop loss here. When this was correcting, it has tapped them out. That was my TP. And as soon as it tapped them out, the market was selling. And many people will be selling. And those that bought right here, down here, that are still holding, they are in trouble now. Because now market has retraced. Okay, and what's going to happen is simple. You are going to see possibly another corrective structure here. Okay, tap to the upside, feel some imbalances right here, calm down. It will just play on people's intelligence. you see a move, correction, you now take a trade. Because you need more upside for this pair. If this pair does not get to this level, we cannot decide what will happen or to it. We cannot decide. We can only take decision right here. Okay, we can take decision right here and see where it is. So it's still playing. It will still be playing. Maybe break this level, push up, correct, before we can move to the upside. That is Euro GBP. There was one I took that didn't work well. That's USD JPY. Okay, USD JPY. This pair has given me loss twice. Is it loss or losses now? Twice. Because I wanted to short it. I was feeling that if this is a corrective structure and this is a W structure, if this is X, I need my Y. I need my Y. I've been on the lookout for Y without proper confirmation, and I've made a loss twice on USD JPY. But of course, it's expected because daily is bullish, weekly is bullish, even monthly is bullish. So you cannot try to short a bullish market in monthly, weekly, and daily. Okay, 1 hour confirmation is not enough to short such a market. So we need at least daily confirmation that UJ is about to, sell off before we can go back to smaller time frame to look for entry. As long as that daily confirmation is not there, it will be wrong to short this kind of market. I want to see something like this, but not with weeks. Okay, I want to see it break down before I'll go to lower time frame to look for confirmation. Good, guys. Of course, before we can see any push up in gold, the simple thing that we're supposed to see is this correcting to this demand level. Let's see what will happen right here. Right below this level. Yes, inside this box. What happens there will determine what will happen to gold, whether we are going to break down for gold, come back and continue to sell, okay? Or alternatively, maybe we are going to have this level, we are going to have the price action for what? For more upside. For more upside. We are going to know that when gold come into this box. We want to see what's going to happen there. Okay, because right here we are in the supply zone, and with this push to the upside, you leave a lot of imbalances there, and it has been mitigated. Can you see? Can you see? It has been filled. So after it is filled, we want to see price action that will tell us whether to move to the upside or not. Okay, that's what we are waiting for in gold. So if you go to lower time frame, you can see clearly that in this time frame, upside is not ready. You see how it moves yesterday, okay, and it dropped down. The upside is not ready. That's why you see it that it doesn't have a very strong impulse. And one of the reasons why it is so is that it has not come to a discounted level. Right here is at equilibrium. Of course, when you have an impulse, market can come into a premium, an equilibrium, a discount. It is only when it comes to a discount that you can find a buy opportunity. At equilibrium, don't buy. That's 50%. At above equilibrium, that's 38%. Don't buy. Let it come to discounted price level before you buy. The same thing is applicable to a sell. When you say an impulse, okay, middle here, equilibrium, premium, discount. Allow this market to pull back to premium price before you sell. If it doesn't come to premium price, please don't sell because it can give you a loss. For instance, if you have this market right here, and maybe this is the end of correction here, okay? If you need to sell this market now, it has to be this level because that's the premium, you know, price level. Why is it premium, guys? If you take a fib of this leg to the downside, you will see that it is only this, when you go to this area, that you are above 50 from here to here. So when you get to above 50, you now begin to look left and see if you have any imbalance there that you can use. And right here, there's imbalance. This is a break of structure. Okay, you have imbalance candle right here, and right here you have supply zone. Okay, at least if you must sell good as it is presently represented on the chart, good must have to buy, rally to this level, okay, from where you get confirmation entry for a move to the downside. Can we get it now? It's as simple as that. Okay, does anyone have any pair that we have to take a look at? You see GBP USD, okay, no sell, no buy right now until it comes to this level. When it comes to that level, from there, you can look for confirmation, sell to the downside. Let's look at CHF.
CHF. Can we look at CAD CHF?
Okay, I'm there.
Okay.
CAD CHF. Weekly. Okay. You see, some of my students who understand this pattern. So if you're having a push, correction, a push, you have consolidation right here, you have a break to the upside. Instead of you to flush down, the price does not flush down, rather the price goes corrective. Okay, anytime you have this pattern, when it gets to the demand level right here, we need a confirmation for a move to the upside. Okay, but if you are having a move to the upside, correction, a move, correction right here, you have a flash up and you have a flash down that break market structure. Any corrective structure back to supply is a move to the downside. These are well established and repetitive pattern in the market. It repeats so well that once we see it, we know money has come. Okay, so in this case, right here, you have consolidation right here. You have the market move up very impulsively. That's fine. But in coming down, it did not come down impulsively. That's where the issue is. It rather came down correctively. So by virtue of that, what we would like to see is, first, we want to see correction back to this supply zone. Okay, from there, we'll take decision. If you break it to the upside, then coming back to the demand, we'll buy. If it gets to this supply zone and break down to the downside, then we'll correct and sell. Okay, this is just it. So that's how I look at the pair. And then when you look at it on lower time frame, you will see that there are some things you should take note of. Okay, look at this candle, guys. You see this, you see this, you see this. This is supposed to be a corrective structure based on ELLIOTT wave theory for a move to the downside. Is that correct? But now there are a lot of modification, advancements, and all sorts to ELLIOTT wave theory. You know, some of us trade advanced ELLIOTT wave theory, modified one. Okay, because a lot of things are happening right now in the market that were not happening when ELLIOTT developed this theory. So we cannot continue to follow everything he said without, modification to the theory. So based on Elliott wave theory, this should be a flat corrective structure for a move to the downside. But of course, if you have an impulse and you have a flat, for this flat to move to the downside, just like this, we expect some reasonable, measure of liquidity to be taken for it to happen. Right here, nothing like that. Instead, you have equal high, no liquidity, nothing. Then where is the volume that should push this market to the downside? It does not exist. The volume does not exist. Okay, so because the volume does not exist, then they know, I've taught this so well in my mentorship program, that if you have this kind of corrective structure, and this one is particularly very strong, if it does not flush down immediately, then there was no liquidity taken, and then this corrective structure will at best result to a more push-up. Simple. And then the projection for that more push-up is in alignment with our, our initial plan of the present supply zone right here, for which we expect the market, to tap into. Okay, we expect this market to tap into this area right here. And of course, below this area, are you able to find some level of imbalance? Yes, even though not too big, but right here, you will agree with me that there is no single buy candle. All are sell candles. Okay, all are sell candles. So all those areas need to be covered up. That's why we expect this pair to come right on top here. So if that's the case, let's go to lower time frame. Let me check something. Let's go to volume indicator. Let's go to volume indicator. I want to check something, guys. We need to check something. Volume. Daily. Okay, this is what I want to check, guys. What do you notice here? This daily candle, as big as it is, okay, come to the volume indicator, the volume is very low. Can you see? Even some of the sell volume here even have bigger volume than this buy volume. The volume right here is low, guys. So it's very, very low. Do you get now? So that is another confirmation that I use to check some of this manipulative move in the market. Okay, and then let's look for how the market will correct back to its level. Okay, let's see how it will correct. Incidentally, I took a trade right here, right at the top, something 80. I've not looked at it. Can you see? I told you something 80 without looking at it. Yes, 72.80 right here. And why did I take it? It's simple. Look at it, guys. Just look at something. You learned something this morning or this afternoon. Look at this. After this market made this move up and pulls down, it broke structure. Okay, leaving behind a supply zone and an imbalance under it. You see how I do my sniper strategy right now. Okay, can you see a supply zone, a break structure, supply zone, imbalance, let it go, it's coming back to fill the imbalance. As soon as it's filled the imbalance, tap into supply, boom, to the downside. Look at it, imbalance, filled. Right here, consolidation, right here. What happened here? Liquidity grab. Grab at where? Supply. After that, it moved to the downside. Boom. I closed this trade at 1 to 4 because it was too slow. When I broke this structure, I think around this level, I closed it. Too slow. Otherwise, I know it's going to go down. After liquidity tap, what do you expect the market to do, guys? It has to flush down and begin to target all the imbalances below, fill them up, all the liquidity area below, take them over. Look at this one, take it up, and then look at this one. Look at this level. It has to take it up. This level, take it up. Right now, look at this one. There's a problem here. Why do I say there is problem here? Don't be surprised. Market will come this way. Okay, it has to take this level again. After taking this level, okay, it will push down again. Or if it does not take this level, what will happen is simple. Since we are expecting it to still keep to the keep moving to the upside, what you just notice is market will be going down. When it get to this demand right here, and it has made this three-wave structure, okay, you see demand right here, right at the low here, and after it has made three waves down, three waves up, three waves down, right here, you see a change of character or a change of structure. Just have a move. You do a move to the upside. Okay, this move to the upside is coming to break this top or this top again. You look like, does it look to you like all this area are area of equal high? Yes. This market is not going to go down without coming to take this high. Okay, that's the first impression this chart has created for me. This high is going to be taken because the market cannot go down like this without it. All right, so that's how I see card CHF, and the only reservation I have with card CHF is non-commercial actors, okay, the hedge funds, they are selling off card right now. So I still wonder why card is a bit strong. If you go to this website, tradingstar.com, you go to tradingstar.com, you see free COT report. You go to COT legacy future, you go to Canadian dollar. You see right here, you have short 57, you have long 36, and then you have about 6,000 short open and only 2,000 long open. So you have more short than long, and you have more short position open than long, and yet card is still having a bullish structure. So if that is the case, what I'm going to be doing, I'm not going to go for a buy. I'll wait when the sell is done. When this inducement to the upside is done, I will look to sell. How? You see this equal high? Once it's taken, liquidity grab, no incentive to go up again, we'll drop it in line with the market makers. Okay, we have 4 minutes more to go, guys. AUD USD, last but not the least. AUD USD. Okay. All right. So you have the daily. You have the daily. No, let's start from the weekly. Look at the weekly. I'm beginning to be more careful selling AUD USD now, because right here, this swing, if you look at that swing, it's right at the discount, right inside the discount on weekly time frame. So it's really difficult to start selling AU right now. And you can see a proof to that. You see consolidation. If it wants to sell, you should see consolidation right here, consolidation and a break up before it drops down, if you want to sell. But now it wants to buy. That's why I see consolidation, a breakdown. Then the next is to buy. Do you get, guys? So now go to 4 hours time frame. Are you supposed to buy it? No. For now, we are not supposed to buy it, because anytime a market break out of consolidation, you have to look at the strength of that breakout. Is it powerful? How powerful is the breakout? You know, it's very slow and very sluggish. So if this coming up to the upside is very sluggish, all we want to see is for it to tap into supply. This is our supply level. And then from this supply, we look for confirmation, trade entry right here, confirmation right here for another move to the downside. This time, it might come very fast down and then fast up to break structure, and then any correction, you now find your trade to the upside. It can happen this way. But for now, let's take it one after the other. There is no particular setup in sight now, but the only thing I'm looking forward to is this. This is the only area I can find imbalance along its break to the downside, and I can also find my supply zone right here. And if you take a fib of this move to the downside, you see that this my supply zone is already at premium price. Okay, it's already at premium price. So anything that makes AUD USD to correct to this level, to correct here, we're going to be looking for a sell opportunity. Look for distribution right here. Boom, 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 and getting for a sell. This is the confirmation I tell you. Okay, you must see that confirmation before you sell. Okay, so I think we have done enough today. So that's how I look at the chart. And of course, to look at the chart this way, I have to combine 3 systems, okay? Demand and supply, okay? Elliott wave theory, okay? And liquidity. I look at liquidity, okay? Liquidity. These are the 3 things I combine together, all right, to analyze my chart. And of course, in terms of direction, I am always right 8 to 9 out of 10 times. Okay, right now I'm working seriously on my entry so that I can get higher risk to reward. Okay, I need a higher trade with higher risk to reward ratio. Okay, so I don't need to be using 30-40 pips. Okay, I have to sharpen the skill to a point where just 15 pips, 20 pips will be enough, and then you don't need to stay on chart 24 hours. Okay, with the few moments you have on the chart, you make things happen, you make your money, and you go and rest to enjoy yourself. Okay, so in the absence of no other thing to discuss, I want to wish you a great day. Who has a question?
I have a question, Mr. Nat.
What's your name?
So
What's your name?
Doing Dino.
Miss Madam Doyin, how are you?
Yes, sir. Fine,
Okay,
thank you, sir.
okay.
So you were talking about prices, premium, equilibrium, and discounted price.
Okay.
And you said something about equilibrium is like the one in the middle.
Yes.
Yeah. So it seems to me like, you know, we used to say when there's a move and correction, we look at 50 to 61.8.
Yes.
And that seems to me to be where the equilibrium
No.
price from what
No.
you said.
No. No, let me answer your question. No. You know, I always said from beginning that if you have a bullish market like this,
Yes, sir.
let's say this is 50,
Yes, sir.
right?
Yes, sir.
Let's say this is 61.8, right?
Okay.
So I always told you, look between 50 to 61.8.
Yes,
This
sir.
is the discount. 50
okay.
and above. Even if you touch 50 and above, don't look at it.
Okay, sir.
You always hear me make that statement. Between 50 to 61.8.
Okay, sir.
That is the discount.
Okay,
For
sir.
a sell, if you have impulse like this is 50, that's the middle. This is 61.8. Okay. Any price above 50, like this, is a premium price. This is premium price. Okay?
Okay, sir.
For a buy, below anything between 50 to 61.8 or 78 or below is a heavily discounted price, by which if you buy anywhere, even if you are buying too early at times,
Yes, sir.
as far as you can manage your trade and you don't increase your loss size, if your stop loss is below here, the market will play and still go to the upside. Do you understand
Okay.
now?
Yes, sir. Yes, sir.
So so if you are if you are always following these rules, you discover that you will never sell where you are supposed to buy, and you will never buy where you are supposed to sell. Look at the impulse. Have you seen the impulse? Yes. Have you seen the correction? Yes. Where is the position of the correction? Equilibrium, premium, or discount? If it's equilibrium, don't sell. If it's discount, don't sell. If it's premium, look for sell. Do you get? If it doesn't come to premium, don't sell. It's not your trade. Because let me give you a logical example. Okay, if I am a distributor and if I'm a wholesaler, you are a retailer. Okay, retailer want to come and buy from the wholesaler at a discounted price. You want me to reduce the price for you? Is that not? So something that's supposed to be $100, you want me to sell it for you at a $60. Is that not? So when I give you at a lower price, $60, I have discounted it for you. You as a retailer, you go and sell. And when you want to sell, you don't want to sell at a discounted price. You want to sell at a premium price.
Yes, sir.
So, and where's the premium price? Right at the top. So you discover that every good businessman will want to go and buy something at a heavily discounted price, but he wants to sell it at a premium price so that he can make money. The same logic is applicable to charts. Once you see your impulse, don't get involved at the middle. If you want to buy, get involved below the middle. The farther away from the middle, the better for you.
Okay, sir.
Do you understand? So that's how it is. All right. Thanks.
Sir, I have a question, sir.
Okay.
I have a question. Sorry, I didn't want to obstruct you earlier. When you were looking at AUD, USD on daily time frame, you mark your supply zone on daily.
Yes.
Daily time frame AUD. You mark your supply zone below the big candle up. You mark it around the small candle.
Okay. This
one, sir. Yes, you mark your supply zone. See the first big red candle. You mark your supply zone around the second one. Yes. Why is it not on the first big candle, between the first big candle and the bullish candle?
Okay, that's a good question. Thank you very much. Okay, so you see, from experience, what we have found out is that when a market is impulsing away to the upside or to the downside, okay, we normally see a kind of a small candle or a doji candle just before the imbalance candle. Do you hear me?
Yes, sir, I am.
Just before the imbalance, look at the imbalance candle. What makes this candle to be imbalance candle? Look at the wicks here. See where it get to. Look at the wicks here. Look at it. Look at the middle here. This is the imbalance we are talking about. So any candle like doji or small candle that you see just before the imbalance candle, in the course of the impulsive move to the downside, and by the time you take the fib of the swing, it's already lining up perfectly with a premium fib level. Look at it. Look at where I mark. What is here? 79%. If you have a market that is retracing to 79%, is it not good?
It is.
Correct. So when you put your fib on the swing, you want to see that where is the position of that imbalance candle. Look at it here. Is there any dodgy candle just above it? Yes, that is your supply. Let's see if you can get example of this on GBP card. I just hope so. I hope so. Can we get it on 1 hour? I have to show you example. Example of this. It's not a perfect one. You see right here, there was no, this imbalance candle, okay? This imbalance candle, look at this. Do you see this candle before it?
Yes.
That is a doji.
Yes.
And after the doji, you have the imbalance candle flush down. Now, watch something. Let me show you something. Right here, you see the end of the beginning of the doji. I want to tap it. Boom. Where does the market get to? That zone. That zone just before the massive, candle. Boom, to the downside. This one does not give us opportunity of a little dodgy candle. But if you take your fib right from here, if you take your fib right from here to this level, you will see that right now you at this zone, you are at 70%. 70% retracement is good. You are premium price, guys. That's why I call for sell of GBP card. And I don't expect it to get to this level because this was the first entry yesterday. Boom. And this is the second entry. I don't expect, if this has impulsed away and has broken market structure right here, I don't expect it to come to the entry point here. It has to impulse away to the downside. So that is the logic behind picking your supply zone. You want to spot a break of market structure. You want to spot an imbalance candle, and just for a sell, just above the imbalance candle, you want to spot, an indecision candle. It's best to see an indecision candle. But in a situation where you don't see an indecision candle, you have to still take the last green candle before the red. You take it. But when you see a small indecision candle, very, very good, because it's going to give you a sniper entry. That was why somebody was saying GBP card yesterday, somebody was saying I got a sniper entry. Say this is a sniper entry. Just because I knew where my supply zone was. And I picked my entry based on my supply zone, and it flows down without a drawdown at all. You get?
Yes, sir.
Correct.
Thank you very much.
So that's how it is. So thank you very much, guys. See you next time. Bye.
Bye, sir.
Thank you, Nath.
Thanks. Yeah.
Thank you, Nath. Bye-bye.
Yeah.